Good evening and welcome to the Self-Made Math, where we work to solve the problem of innumeracy. Right now, you are looking at a rotating plate of rolled nickels. There's $100 worth of rolled nickel coins on a rotating plate, and you're asking yourself, why, Rich? Why? We'll get to that in just a minute, but I wanted to give you that look. Because tonight, we're going to be talking about hoarding nickels for future profit, maybe. So we're going to be using 7th grade math tonight to try and do a little bit of somewhat sophisticated financial analysis. And so because we're talking about money and financial analysis, I should probably make it very clear to everyone that I am not a financial advisor, and I am not here to give you financial advice. This is strictly an exercise in unit grade math, and it's a math class, not an investments class. So with that warning, let's get started. This is a Jefferson Nickel. You've seen these all over the place. They're in your sofa cushions, they're in your wallets, they are in your purses, they are in the cup holders in your cars, they're in your junk drawer, they're in your change jar. Can't be anything more basic than that. In terms of a coin. So nothing special about it. How much is it worth? Well, it's worth 5 cents, 5/100ths of a dollar. And that's one way to think about currency, the face value. Another way to think about currency is, what does it buy you? And I'm here to tell you that one Jefferson Nickel, if you go to Runnings in Putnam, Connecticut, will buy you one Tootsie Roll at the candy counter. So you could also think about currency in terms of what it will actually buy, its purchasing power. The third way to think about coins and metal currency anyway is its meltdown value. And that's the work that we're going to do tonight, using nothing more than ratios and unit rates, just like our kids are doing in 6th and 7th grade math. And we're going to get to kind of an interesting example, or interesting inclusion, which may explain why I've got that rotating carousel of rolled coins over there, all 2,000 of those nickels. So with that, let's dig into a little math and a little bit of hoarding nickels for future profit, maybe. Okay, so I showed that nickel earlier, and before we can figure out what it's actually worth, we need to know a little bit more about it. So I went out to Wikipedia and pulled some important information about the Jefferson Nickel, the very one that's in your cup holder and your sofa cushions. It weighs 5 grams. Total weight of the coin is 5 grams. It is composed of 75% copper and 25% nickel. So the first question in trying to figure out what the meltdown value of this coin is, that is, how much is the actual metal inside the coin worth, is how much copper and how much nickel do we actually have in that 5 grams. So a little bit of quick math here. We know that 75% is copper, so we multiply that by 5 grams, and we figure out very quickly that we've got 3.75 grams of copper. And then we take 0.25 and multiply that by the 5 grams, and we see that we have 1.25 grams of nickel. Just a quick check to make sure that we've set this up correctly, because if you don't get the setup right, you're never going to get the right answer. We do see that the 0.75 and the 25%, those add up to 1, so that's good. We got everything. We didn't double count everything. We're at 100%. And we see that we have 3.75 grams of copper, 1.25 grams of nickel, for a total of 5 grams, and that is what Wikipedia told us that we should expect a Jefferson Nickel to weigh. So we haven't double counted. We haven't left anything out, so we're good to go there. So we've broken out, we now know in 1 nickel, how much copper do we have and how much nickel do we have? And so the next question becomes, how much is a gram of copper worth? And how much is a gram of nickel worth? We'll start with copper. This morning, January 18th, I went out to Kitco Metals and pulled a 24-hour chart of the spot price of copper. So this is what somebody is willing to pay or get paid for a pound of copper on the spot right now. And I saw that copper this morning closed at, or was selling when I looked anyway, at $4 and almost 43 cents per pound. Now remember, we've got grams of copper and they've given us a price in pounds. So that's going to present a challenge. And before I go any further, I will also point out that we do go into the partial pennies. So we don't round to any pennies. We actually go out a little bit further, because people typically trade in very large amounts of money, hundreds of thousands of dollars, and even millions and tens of millions of dollars. So those extra decimal points actually, when you're dealing with money, that much money, those decimals actually matter. It's thousands of dollars. So we go out a little bit further than you ordinarily would on something like, say, a Tootsie Roll. But in order to get that to grams, we're going to have to do a little bit of unit rate math. And we'll start with what we know, which is that copper costs $4, and I'm just going to call it 43 cents per pound. Our next step, we will go ahead and multiply that by something else we know, or most of us know, which is that 1 pound has 16 ounces. Now, the way this sets up, I can now cancel out my pounds, and I will end up with a dollar price per ounce, which is not grams. But right now we're looking at almost 28 cents per ounce. And we need to translate that into a dollar price per gram. So I went out to Google and I learned that 1 ounce actually includes or contains 28.3495 grams. So we have that. And once again, the way I've set this up, I can cancel my units and I end up with a dollar price per gram. And just to make sure we're interpreting this, we're all on the same page in how we're interpreting this, it's a little less than a penny per gram. So 1 gram of copper costs a little bit less than a penny. Now let's take a look at nickel. Again, I was out there this morning, I checked spot prices, and nickel today was selling for $10 and almost 25 cents per pound. So again, we're going to do the same routine that we did just now with copper. And we're going to start with what we know, which is $10 and almost 25 cents per pound. We know that there's 1 pound. 1 pound contains 16 ounces. So we're going to cancel our pounds. And that's going to give us a dollar price per ounce of about 64 cents. And then we're going to take another conversion. 1 ounce has 28.3495 grams. I expect everyone to remember that to the decimal point when we're done. And that will, after canceling our ounces, give us a dollar price of about 2 cents, a little more than about 2.25 cents per gram. So now we know how much copper we have in that nickel. We know in grams. We know how much nickel we have in that nickel coin in grams. And we also know the price of each metal in grams. So we're about to figure out how much that Jefferson nickel is worth if we were valuing it for the money, or for the metal that it's made of. So we'll start with copper again. We've got 3.75 grams of copper. We know our price of copper is almost a penny per gram. We're going to cancel out our units again, just like our 6th and 7th graders are learning to do in school. And that is going to leave us with a price of about 3.6 cents, or a value of about 3.6 cents worth of copper in that nickel. Same thing with the actual nickel metal in there. We've got 1.25 grams of nickel. We multiply that by our price per gram of nickel and cancel our grams of nickel, because we're very fastidious about the way we handle our units. And we see that we have a dollar value of almost 3 cents worth of nickel in that Jefferson nickel coin. So my total meltdown value is the sum of the copper that's in there and the nickel that's in there, and using spot prices from today and doing some conversions to get it to a dollar price per gram. We see that the meltdown value of that 5-cent coin is actually more than 6 cents. It's almost 6.5 cents. And to put that into a little bit of perspective, if we take the ratio of the total meltdown value that we just came up with, and we take the ratio of that to the face value, again, in dollars or cents, depending on how you look at it. Cancel our dollars because, again, we've got dollars in the numerator, dollars in the denominator. That ratio works out to be 1.296. I mean, one way we can think about that is that the total meltdown value is almost 30% higher than the face value of the coin. Interesting. Another way we can look at it is going back to my rotating carousel of Jefferson Nickels. The total meltdown value there, now before we go there, it's $100 worth of face value. And we know that the ratio of meltdown to face is 1.29658. So that actually makes that plate worth of nickels not worth $100. Well, it's worth $100 because that's how it spends. But were I able to somehow melt that down or dispose of it for its metal value, it'd actually be worth $129.66. So again, not a bad little windfall there. Before we jump up and down and start placing large change orders at the bank, there's a couple things that we want to think about here. Number one, it is very illegal and very dangerous to melt down US minted coins. It is a federal crime to melt US coins or transport them outside of the United States for the purpose of melting them down. Do not start your own backyard metal meltdown operation. Number two, nobody in their right mind is going to buy Jefferson Nickels for 6.5 cents when you can go to the bank and get them for 5 cents face value. I've actually left the link in the description on this point. It's a classic Saturday Night Live episode where there's a bank that's in the business of making change. And I'll leave it at that, but it's definitely worth a watch. And then a third consideration here. So considerations 1 and 2 basically tell us that there's no easy exit strategy, right? So I can go out and buy $100 worth of nickels and pat myself on the back all I want because they're worth, $129 and some change. However, there's no way to actually realize that gain at this point. We'll come back to that in just a minute. But the other thing that's worth looking at here is that the nickel hoarding strategy we just outlined has only recently come into the money. That is, the melt value has only recently begun to exceed the face value. And we can take a little bit of a walk down history lane here, memory lane, and look at some price history on the metals that make up the Jefferson nickel. So this is a 5-year chart of copper spot prices. Again, this is what a pound of copper was going for on the spot, not off in the future, right now, right here, right now. Money changes hands, product changes hands, and off you go. On the x-axis, which is the one that runs left to right across the bottom, we've got time, and it goes back 5 years to January of 2017. And then our 6th and 7th graders could absolutely tell us that the y-axis has the price of copper per pound. That's going up and down on the left. And what we see is that copper, is probably between 250 and 350 right up until the time that COVID hit, which is that yellow bar, more or less, and I'm kind of eyeballing it, but that steep drop that you see has everything to do with the fact that COVID was moving rapidly around the world. It looked like it could be a very serious health problem. The economies were most certainly shutting down. And what people who were trading copper were thinking was, well, we're not going to have any manufacturing there because the economies are shutting down. Therefore, there will be no need for copper. Therefore, and I don't know what's going on with this pandemic. And so I should probably just sell everything I have, take my money, and then I've got liquidity. I've got money, that I can use in an emergency. But they were dumping those metals. That didn't last for very long because prices went down about 25%. But other people started to realize, and more information came out, COVID was serious, but was not going to be a mass extinction event, and that the economy would eventually recover. And as manufacturing spun back up again, there was going to be a supply squeeze because the mines had been shut down and nobody was mining copper. So you can see what happened to the price. It went from a little over $2, $2.30, call it whatever you like. But it's really doubled. It's gone from under 250 to almost 5. So it's nearly doubled in a year and a half since then. So that is a major price move in a relatively short period of time, particularly when you look at how relatively tight the trading range had been going back to January of 17. So big step up in prices. And we'll do the same look real quick at nickel. Nickel wasn't quite as flat, but you could actually kind of see a trend line. It's always been it's been up and down, but it's been moving higher over time. But you see the same kind of decline during that COVID period that I've outlined in yellow, and then a pretty relatively steep increase since then. And again, it's gone from about $5 to a little over 10 today. So that's also about doubled since this late spring, early summer of 2020. And so obviously one big notable drop there. I'm not sure what happened in February of 21, but one of the things that you look at now is you've got relatively lower prices to the left of COVID and relatively higher prices to the right of COVID. And that's really what's happening with nickel. It's also very clearly, it's a tale of two times with copper. And if you're looking to try and figure out what the future melt value of your Jefferson Nickels is going to be, you have to form an opinion about, are we in the future, are we going to be on the right of COVID, that is with higher prices for these metals, or are we gradually at some point going to move back down to what the average had been pre-COVID? And if we're on the right, we probably have a viable potential money-making opportunity by hoarding nickels and saving them for the future. And if we go back to normal levels, that meltdown value is going to be pretty darn close to 5 cents, in which case your opportunity is not, and you're just sitting on a bunch of nickels in shoe boxes in your basement. So got to come up with a opinion about where you think prices are going to go. Now, if you're in the camp, and just for fun, we'll assume that we're all in the camp that says inflation that we're seeing in commodity metals like nickel and copper is not actually transitory, but it represents the future. Prices will continue to go up from where they are or level out at where they are. Then you would know that the melt value of your nickels is more than the face value of the nickels. And you would start to think about, well, I can't melt them and I can't sell them because they're available at the bank for face value. So what are we going to do? And what are we going to do is wait. And what are we going to wait for? We're going to wait for history to repeat itself, because we've actually been to a very similar place before in most of our lifetimes. And that happened with the copper penny. So in 1983, the US Mint changed the composition of the penny because the value of the copper in the penny exceeded the face value of the coin itself. So you had more than 1 cent worth of copper in your penny, and yet it was spending and being spent as though it was worth 1/100th of a dollar. So not a great deal for the government. So pre-1983, like I said, those were known as copper pennies. They were 95% copper. And then beginning in 1983, when they made the change, they went to a copper-plated zinc, so a much cheaper coin to produce and worth less than 1 cent if you melt it down. I haven't actually looked at the price of zinc, but I'm taking everyone's word that it's significantly less than a penny. So we've been here before, where the government changed the composition of a coin because the melt value was higher than the face value. And so you ask, what happened to all of those pennies? Well, people started to pull those copper pennies out of piles, and they started to hold them back and collect them because they knew that there was a profit to be had there. And what has happened since 1983 is that there's now a strong market for those pre-1982 copper pennies. And I'm not just talking about wheat pennies, which we won't get into tonight, but it's a slightly different, it's a copper penny, but it's an older version with a different back other than the Lincoln Memorial that we see in this picture. But there's a very strong market for those copper pennies today. And in fact, you can go to an online coin dealer and they're willing to pay you 2.2 cents for every pre-1983 penny that you give them. So about more than double, about 120% of what the face value on it is worth. It's a strong market because there's dealers looking to purchase at a pretty good markup, and there aren't really that many for sale. If you go most of the coin dealers, I couldn't find any that had any kind of quantity of pre-83 pennies available for sale. So they're out trying to get them, and they're willing to pay because of two things. Number one, people want to buy them. And number two, they may be speculating themselves that the price of copper is going to go up in the future. And this is a way for them to be able to purchase them for 2.2 cents per today and maybe sell them for 4 cents 3, 4, 5 years from now. So that could be a business strategy that they're undertaking. So that is one play on a very ordinary, run-of-the-mill, normal thing that we all have laying around our houses, the Jefferson Nickel. Now, am I suggesting that you call up your bank tomorrow and put in a change order for $100 worth of coins like I did? No, I'm not suggesting that. I did it because we're trying to do a show here, and I thought it would be an interesting visual. And hey, look, I got $30 out of the deal. So, but what I would suggest, if it were me, is if you're a coin roller and you're somebody that a couple times a year takes all your spare change and rolls it up with the family and then takes it to the bank and deposits it, you might want to hold those nickels back and just throw them in a shoebox, because they might be worth more than the 5 cents you're getting for them today when they're trading at face value. So just something to think about. Again, as I said, not financial advice, not in the financial advice business, but an interesting way to look at very simple ratios and changing units and managing units to get at something that might be profitable down the road for us. So that is tonight's episode of the Self-Made Math. If you enjoyed this content, please hit the subscribe button for Coalition. It's great that they're having me on here. Pick a thumb up or down. If you have comments, questions, leave them in the comments, and we'll get back to you on them in a future episode, or I'll drop you a line if you leave me an email address. But I definitely enjoyed doing this, and hope you enjoyed this evening's presentation. And I'm hoping that you look at nickels just a little bit differently now. Maybe you just don't throw them into the drawer. Maybe you put them in a slightly more secure place, because someday they might be worth more and you might be able to sell them for more. Until the next episode of the Self-Made Math, I'm Rich Southwell. Thank you so much, and look forward to seeing you on the next episode. Bye-bye.